Hey guys, welcome back to TradFi and Bitcoin Club. So today we will be doing part three of the Lyn's article, The Rise of Bitcoin Stocks and Bonds. So as you know, we discussed this article maybe 2 weeks back, and I was not there for last 2 weeks. So what I will do is uh, I will cover this article last the remaining part, and then today we have one of our guests, like me and Shivam, went to the Plan B Summer School Lugano. So after I finish this, we will share our experience in the Plan B Summer School, which took place in Lugano. And also, I will try and link this article with the things which I understood by going to Lugano. Like there were people like Preston Peace and Alan Farrington. So they gave talks which are similar, which are the talks can be linked with this article. So yeah, I will try to link this article with the talks also in between. So yeah, let's start. As you all know, we have covered this Lyn's the rise of stocks and bonds. So we covered why Bitcoin stocks and bond, what is capital mandate, like the reason is capital with mandate. So let me just revise for the guys who have not attended first two sessions. So what is capital with mandate? So capital with mandate is basically like, let's take Lyn's example basically. So Lynn has her own portfolio of stocks where she invests in um, some high growth companies, but even though she was long on Bitcoin, she was unable to buy, like she was unable to take exposure in her portfolio to Bitcoin. So at that time, she discovered MicroStrategy, and then she built a position in MSTR back in, I think, 2021, or yeah, some time around that. And then so what is capital with mandate? Mandate is basically like, for example, a mutual fund manager is running a mutual fund, and the fund's mandate is like to invest in IT stocks. So this guy can't invest in the universe beyond IT stocks. And similarly, there are different types of funds. For example, there are credit funds or money market funds wherein they have to invest in US treasuries or bonds or things like that. So, what these Bitcoin treasury companies are doing is like they are opening, uh, like Preston Peace used this thing. Like he gave a presentation where he talked about there's a dam full of water, and the water is capital, and this dam is made up of debt capital. And uh, like if we build a motor, if we build a machine which can use the volatility or the what we can say, uh, the energy of water coming downhill, like there are electricity, like hydroelectricity generation power plants which generate, um, which convert water's kinetic energy to electricity. So similarly, there is ton of capital sitting in debt and credit markets. So these Bitcoin treasury companies will convert this debt capital into Bitcoin. For example, MicroStrategy is doing this with the help of Stride and Stretch. So Stretch is one of the most successful products. For the people who are not aware, STRC is the largest IPO ever in the world. It was literally the largest IPO in the preferred stock market, preferred stocks. Initially, it was 500 million. Like initially, Sailor and all the strategy guys, they discussed about it, and they thought that we should do an IPO of 500 million. And literally, me like Preston's lecture was there 2 days after, when a sailor dropped this STRC, and Preston was explaining us how STRC will be like crazily product market fit, because STRC, maybe we can discuss STRC in one of our coming sessions. But in the session itself, he said like STRC is a crazy product, and in the next on the next day itself, strategy guys upsized the IPO by, first they upsized to 2 billion, and they took it from 2 billion to 2.5 billion. So initially they literally just planned it for 500 million. So STRC is like an iPhone moment for MicroStrategy. So many people in this space, they think like, yeah, this is the thing, and Sailor can issue this very easily. So this is what I am explaining, like capital with mandate. So with STRC, Sailor is targeting debt and credit market. So yeah, this is about capital with mandate. Then I will come to corporations have ideal leverage. So this was the point regarding, for example, you are an individual, and if an individual wants to leverage on a Bitcoin, so he have to take some leverage, and there are high chances that an individual might get margin called. But in case of corporations, there is an ideal leverage which corporations can take. So this is the second reason why Bitcoin treasuries make sense. The first reason is capital with mandate, and the second reason is the ideal leverage. An individual can't, because Bitcoin is like really volatile. Uh, Taking leverage on Bitcoin is a hard job for an individual. But if you to take some exposure to these Bitcoin treasuries, then you can have some ideal leverage in your portfolio. So this was the point around corporations have ideal leverage. Basically, they can issue bonds and stuff, which are not like for a longer period of time, which is not generally in the case of individual. So this was the second point. Then we discussed about, do corporations help or hurt Bitcoin's mission? What would success look like? And I think I finished this, what would success look like, and we will come to step 2, how corporations fit in. So let me come to step 2. Yeah, how corporations fit in. So yeah, here we are going back to one of our reads. I think Saurabh and Bala started this. Pierre Rochard's article of speculative attack. To the people who don't know this, basically speculative attack is the thing wherein individuals borrow more money and put that money into Bitcoin. So this whole article revolves around this. People can go on and read this for much better understanding, or maybe they can watch our previous videos. So yeah, let's continue. Back in 2014, Pierre Rochard wrote a prescient article called "Speculative Attack." A speculative attack in forex markets refers to borrowing a weak currency to buy more of a strong currency or other superior asset. So in our case, borrowing dollar and investing that into Bitcoin, and yeah, it's one of the reasons why central banks raise rates to strengthen their currencies. It helps disincentivize them from being borrowed too rapidly, relative to other currencies. If that proves insufficient, some current countries will turn to outright capital controls to prevent entities from arbitraging their mismanaged currency. And those capital controls themselves come at economic costs. as who wants to do business in a country with tightening capital controls if there are better options elsewhere? Wikipedia provides useful definition in economics. A speculative attack is a precipitous selling of untrustworthy assets by previously inactive speculators and the corresponding acquisition of some valuable assets, currencies and gold. Well, in Rochar's article, he described that eventually, due to Bitcoin's appreciating nature, various entities will end up borrowing currency to buy more Bitcoin. Bitcoin was a bit over $600 at that time with market cap of 8 billion. At first, borrowing to buy Bitcoin was just around the margin. But now that the Bitcoin network is highly liquid and has 2 trillion plus dollars of market capitalization, it has entered mainstream capital markets at scale with billions of dollars of corporate bonds outstanding for the specific purpose of buying more Bitcoin. Here in the present, 11 years later, where it's routinely happening, is this good or bad for Bitcoin as a network? From what I have seen, there are two main types of critics that would say it's not good for the Bitcoin network. The first type of critique are themselves a subset of Bitcoin users. Many of them are cypherpunk camp or self-sovereignty camp. To hand over Bitcoin to custodians seems dangerous, or at least against the ethos of the network. From many of their perspectives, a term I have seen used by some of them to refer to corporate Bitcoin treasury proponents is suit coiners, which I think is a great term. This Bitcoin camp as a whole would much rather people hold their own private keys. Some of them go further and say that rehypothecation of major custodians could suppress the price or otherwise impair Bitcoin's ability to succeed as freedom money. While I like the values of this camp and I am basically in it myself, some of them seem to hold utopian dreams where everyone becomes as interested in fully controlling their own money as they are. So these are the first type of critics. Basically, many of us will come into this first type of critics who don't like, what's happening in Bitcoin treasuries and a honeypot is getting created and all. So I want to expand on this para. Like we had some good discussions around it in the school, in the summer school at Lugano. So some people asked like, there's honeypot being created. Even we discussed me, Finning, Amol. Like we discussed in our earlier session, honeypot is being created. Like bitcoins are gathered in a single they are being gathered in a single entity. So the main concern is that what happens if US government nationalizes MicroStrategy. Like they will support in the first go, and then after when they acquire good number of coins, they just come and say, yeah, hey guys, you are you are nationalized. And this was the question asked to Preston Peach. And this is how he answered this question. So he said, yes, absolutely, this is a risk. And the second point which he made is like, this is a risk, no doubt. The second point which he made is like, he said, like, when MicroStrategy is now already in NASDAQ 100 and very close to be get in the S&P 500. So when MicroStrategy becomes part of S&P 500, many or most of the US citizens, basically around I think 70% of US citizens invest in S&P 500. So most of them will get exposure to Bitcoin and most of them will get exposure to Bitcoin via MicroStrategy. So uh, this will cause what I can say. This will cause US government to not to take this action. Like if some government takes this action and nationalizes MicroStrategy and like a good number of people in the US, they hold Bitcoin exposure via MicroStrategy. The next time when elections happen, at that point in time, maybe that government will not come into power again. And this is the risk for the people out there sitting in the Congress. So this is how we answered
That's a
this
good.
question. Uh, and yeah, the one more question which I am remembering is like, what do you think about why is seller not disclosing his address? So this is a complex question. Like, we also discussed it earlier. Like, will seller disclose his public? Will he make his address public and all? So Preston answered this question like this. So he mentioned it like this. Like like Sailor has this like around 6,28,000 bitcoins. Like, this is like crazy. Even nations can't acquire this much amount of bitcoin going forward into the future. So if he discloses his address, then he, like, there's a risk for him. Like, for example, you have ton of gold sitting in your like, you have ton of gold, and only you know it, like, you have ton of gold, and now people are asking you, like, disclose your address. So where are you keeping that gold? So it's like a difficult situation for you to disclose. The other argument here is like, say a MicroStrategy is a public company, therefore they should disclose. But still, I mean, disclosing addresses, I am not like, I don't know what are the technical consequences of disclosing the addresses. Maybe Bala has good knowledge on that. We have also discussed that in past, how zero knowledge proofs can be used by sailor and all. Even he has talked some point about zero knowledge proofs and using them to close the addresses and all. But yeah, I mean, it's far away. And one more thing which Preston added in his answer was, public companies are highly audited, and they are sitting in a regulatory environment, and they are not like FTX and some offshore exchanges doing some uh, what I can say, some shitty stuff, doing rehypothecation and all. They get audited by big firms. But yeah, we are the people from Bitcoin ethos, and we want this thing, like, do not trust, verify. We like this thing, and even I like this thing. So I mean, yeah, there's a mixed opinion on this thing. So there he mentioned, Bitcoin treasury companies are not for every Bitcoiners. Basically, Bitcoin treasury companies are for the people who don't like volatility, but still they want Bitcoin exposure. So Bitcoin treasury companies will do some financial engineering and give some less volatile products like Strike or convertible bonds
23649.
or Strife or STRC. So these kinds of products will be given to the people who don't like volatility of 60, and the people who are at age of 60. Basically, Sailor is offering starved investors a good yield. Whatever the perpetual preferred stocks he has, the stocks are trading at a credit spread of nearly 400, 500, 600 basis points, like 4-5% above the current equivalent of other prefs which are there into the market. So this is how he is giving some Bitcoin exposure. We can't say he's giving Bitcoin exposure to STRF and STRC, but yeah, he's giving Bitcoin exposure to STRK and convertible bond holders. This is the reason, like these are the first type of critics. So this was the basic answer given by Preston, which I basically agree on that front. And let's go to the second type of critics. So the second type of critics are generally people that have stated a negative Bitcoin in the past. They have questioned Bitcoin's ability to succeed over many years as it keeps rising to new heights, as the best performing asset around many years and many multiple later. Some of them have instead changed their view to something like Bitcoin may be going up in price, but it has been captured. I take this camp less seriously than the first camp and view it mostly as a cope. It's similar to perma bears in equity markets that when their bearish thesis hasn't played out, after a decade, shift to saying something like the market is only up because the Fed is printed so much money. My response to that would be, well, yeah, that's why you shouldn't have been bearish. So the second type of investors are like TradFi people who don't get Bitcoin, who don't understand Bitcoin. So Lyn says like I am in the first camp and first type. So basically I agree more with the first type of people. Basically most of us will agree with the first type of people because we know that what Bitcoin can do and what Bitcoin is doing. Yeah. So let's go further. What I would say to both of those camps is to point out that just because some large pools of capital choose to hold Bitcoin, it doesn't mean that that free range Bitcoin is anyway impaired. It can be self-custodied and sent peer-to-peer, just like it always have has been. And if anything, as many other types of entities hold it, it makes the network larger and less volatile, which improves its usefulness as peer-to-peer money as well. It also potentially provides political cover to help normalize the asset relative to policymakers that want to cause it harm. Large pools of capital buying Bitcoin was always going to happen if it reached this scale. So this is very interesting. Large pools of capital buying Bitcoin was always going to happen if it reached this scale. So to the people who know about power law states this thing like as the asset grows bigger and bigger, to increase the price of that asset, more amount of money needs to be what I can say needs to be pumped into the new asset to increase the price. Like for example, if Bitcoin is of 100 billion market cap, when Bitcoin is at 100 billion market cap, even like 1 billion or 2 billion can move markets. But Bitcoin is now 2 trillion. So moving an asset of a market cap of 2 trillion requires large amount of capital to go in. So where does this capital come from? Like this has to come from the other existing capital pools. Like Sailor shows this debt, bonds, money, equity, real estate. So capital has to flow from these capital pools to into Bitcoin. Unless and until this happens, uh, like Bitcoin price going up is is hard according to the power law. So this is what power law states like uh, more and more amount of capital should come in as the asset grows bigger and bigger in. And so this was the point. Here's a Lyn's tweet who says it's the cyberpunks and libertarians doing it. Several of those remain pseudonymous as they build privacy tools and such. Bitcoin with millions of users have people of all sorts of interests and talents. Some have political and lobbying interests slash talents to make sure politicians are protecting users from some of the most draconian things governments could do. Others ignore it and do their own work. That's the benefit of having large net. One of the cope tendencies I have seen among Bitcoin bears, not putting you in this camp per se, is that they said the state wouldn't allow it, would shut it down as a justification for not being bullish years ago. Then, as the network grew massively, and a subset of politicians liked it either because they have anti big state views themselves or because money speaks, those bears shift to, well, now it lost its way, now it's captured, as a way to continue to be bearish on the idea even as the price soars and the network strengthens. Part of being bullish years ago was understanding this type of game theory. Bitcoin is a big tent, it's free range and cyberpunk and global. People can build on it permissionlessly and corps and governments can buy it. Other people can lobby for legal protection, etc. As it reaches this scale, part of the adoption is having corporations and governments get in on the game. It seeps into places like a Trojan horse. That was always the path once it gets big. Hal Finney was talking about it, Bitcoin banks back in 2010, for example. The best aspect of the network is that it brings all sorts of people to it, and people can plug into the stack at whatever point works from them. Whether it's a cypherpunk making code, or Chaumian mints, or a suit stashing it into an ETF, or a politician helping provide legal cover for the constituents so that they are not signed out and have to move. Bitcoin is for anyone. It's literal. Bitcoin is for anyone. And you know, read this line once again. Like when I read this article first time, Bitcoin is for everyone, anyone. So this line states the thing like Bitcoin is for anyone and not for everyone. Like most of the like even myself, what I think is like Bitcoin should be bought by everybody and should be self custodied by everybody. Even I talked with some of you guys. I talked with Shreya. I talked with Saurabh. Like, how are we going to orange pill Bharat? Like, I use this word specifically Bharat and not India. So basically, Bharat means uh, basically rural India. So how will you orange pill rural India? This is a hard thing to do. Like they don't know how to use computers. They don't English as a language. So explaining Bitcoin to them is a tough task, and also incentives are pretty less to do this thing.
Yep.
So when
Beyond this, just
corporations
okay,
are
if I
coming
can
in, yeah,
just
yeah,
touch upon one point. Yeah, this tweet
yeah,
and your
yeah,
explanation was brilliant, Digant. And I remember we had this conversation at BitPlebs, and I think
yeah,
the quick dirty answer to that is that stories like Digant, stories like Shreyan, stories like Shivam Gupta, stories like Sunil Kumar from Hisar. He's a Bitcoin miner who has done Bitcoin mining in Ethiopia, Paraguay, and he is currently working on Bitcoin mining workshops across the country. And like one update that like I think all of us should be excited for is that Mithilesh Kumar has been kind enough to set up a meeting with the chairman of RIS on 30th of August this month. And he's also inviting regulators from RBI, Ministry of Finance, and all of them have agreed to speak to us about Bitcoin. And like we have got foot in the door. It is about our duty to make a good case for Bitcoin to them. And I think like this tweet pretty much summarizes it, right? That Bitcoin is for everyone. It's for cypherpunks. It's for people who can run a node and use Bitcoin peer to peer. You can still self custody it. Privacy is a huge challenge pre Bitcoin, right? Internet privacy has been an open problem for years now, and it will continue to be a problem. And then there are different factions of people who will solve that problem as well. So yeah, optimistic for Bitcoin. Like Bitcoin is the Trojan horse. This technology is changing the world at all levels.
yeah, yeah. So yeah, this is how I see basically when Lynn says Bitcoin is for anyone, I was trying to link it this way. Like when we talk it from a perspective of cypherpunk, we think that every individual should own Bitcoin. But in the near future, or like even in the 10-20 years, I'm not sure like if Bitcoin will reach, I mean, it can reach villages, but it will not reach every individual. So how will it reach every individual? So Preston made this point, he made this point, keeping in mind US. In the US, basically most of the percentage of their population invest in S&P 500. So he the title of his lesson was BTC super spreader. So he made this point, like, if Bitcoin as an as a technology or as an asset grow, then this has to grow. Like, he made this point where he said, like, orange pilling is not scalable. So he made this point where individuals will get Bitcoin exposure via Bitcoin treasuries. So some of you might not like this idea, but uh, this is the way. Like, orange pilling every single individual is hard. But if strategy or other Bitcoin treasury companies uh, enter into the S&P 500, then US citizens will start getting exposure to Bitcoin. So this is how he's optimistic on Bitcoin treasuries, and this is how he thinks Bitcoin will scale. And the line which says Bitcoin is for anyone is literally, Bitcoin is for anyone. Like, it is also for corporations. And we can't say like these guys are doing things wrong. Basically, they are also abiding with rules. They are not changing the consensus mechanism. They are playing with the rules. And if something is going to happen wrong, then it's on the cypherpunks. Like, they have to then redesign this code. So I was having this chat with uh, one of the guy in the Plan B. uh, so I was discussing this thing of Bitcoin treasuries with him, and he's not into Bitcoin treasuries. And I asked him, like, how do you see this Bitcoin treasury space? And he was like, basically, I told him, like, many people, like, from Bitcoin ethos, they don't like this Bitcoin treasury thing and all. Even he is not in the Bitcoin treasury camp, but he said this thing to me is like, there is no single Bitcoin ethos. So basically, what uh, what we think as a Bitcoin ethos, like, there are different kinds of Bitcoin ethos. There is one kind of Bitcoin ethos which thinks like Bitcoin treasuries is not a thing, not a good thing, or for Bitcoin in the longer term. And there is another kind of Bitcoin. So you don't have, uh, like, what I can say, you don't have to justify yourself to either of the ethos. Like, you can do your own thing, uh, unless and until you are abiding with and abiding with consensus. And Bitcoin is designed in a way wherein the stake of your Bitcoins doesn't give you power. Basically, even if Sailor owns half of the Bitcoins, he doesn't have a good say in the Bitcoin network. Like, nodes are the things which give, and not Bitcoin. Bitcoin is not proof of stake. Bitcoin is proof of work. So this is the thing which I got into, and which I so before going to Plan B, I was also in a doubt, like, what I am doing, and is this good and is this bad. I had chats with many of you guys, and currently I am in a state like, yeah, this is happening with rules, and this is nothing like Bitcoin treasuries are not breaking a rule in the consent. So this is the thing, like, we are playing the game with the rules. So yeah, so I am now completely convinced with Bitcoin treasuries thing, and this is the way forward into the future. This is what I personally think. Maybe some of you guys can't agree with me, and it's basically an individual's choice. So I am now in the camp wherein I think like Bitcoin treasuries is the way to uh, get Bitcoin exposure to most of the percentage of the population. And basically, it will be the first step where people will get introduced to Bitcoin, and from then onwards, it's our duty to tell them, like, Bitcoin treasuries is not the only thing. Then you have to tell them, like, do your, like, sell your some Bitcoin treasuries and get your Bitcoin into the self custody thing. So this is how I see the future of Bitcoin going through. So yeah, this was the thing. It was a long. Let's go into the next thing. One of the skills that perma bears have, regardless of the asset in question, is to pivot the narrative whenever needed, so that regardless of what's happening, they are right and the asset is unsuccessful. For Bitcoin, it means creating a narrative such that there is no conceivable path to success or any reasonable definition of what success looks like. If it's stuck at the niche retail level, then its price appreciation and ability to positively impact the world is impaired. See, it's failing. If it's adopted by large entities and governments and continues to grow massively, then it captured and lost its way. So this is how some of you guys might think. So these are perma bears. Like, if it's not adopted by institutions, say, yeah, this is the thing which some of you guys who have lost your mind and keep talking about Bitcoin 24/7, and no one is adopting it and nothing is happening. And there's and when adopted, then the same guys will tell, now this thing is getting captured and this is going to fail. So basically, this doesn't make any sense. This is how the asset will keep continue the asset will keep continue to grow massively, and without institutions coming in, this can't happen. Like, how much money does retail have? Retail retail has good amount of money, but when you compare it with institutions, like, institutions have crazy amounts of money, and they can get access to crazy amounts of different pools of capital. So this thing is inevitable, according to me. Yeah, but if it's going to become large and widely in some way, how does that path not go through corporations and governments at some? I'm somehow reminded of that from the notebook where Gosling keeps asking McAdams what she wants. The bulls are Gosling and the Permabears are McAdams. What do you want? It's not that simple. Bitcoin has gone through a few major eras in terms of who is moving the price and accumulating rapidly. In era, people mined it on their computers or sent to a trading card exchange in Japan to Mount Gox to buy some and other friction filled early adopters things of types of things. This was the super early user era. In era 2, particularly after Mt. Gox blew up, it became easier to buy and use onshore exchange. Let people in many countries buy Bitcoin much more easily than before. The first hardware wallets came out in 2014, which made it safer to self custody Bitcoin. This was the retail buyer era, where frictions were still present but were diminishing. In era 3, it became large and liquid enough and with a sufficiently long track record to attract more institutions and entities, built institutional grade custodians for it. Publicly traded corporations started buying, and various ETFs and other financial products came out to allow various funds and managed pools of capital to get exposed. Some nations like Kingdom of Bhutan, El Salvador, and the UAE mined it or bought it and hold it at sovereign level. Others, like the US, have chosen their confiscated coins rather than keep selling them back to the market. Fortunately, and this is important, each era still includes the prior ones. Even though corporations are doing most of the net buying, Currently, retail investors can still buy as much as they want. As it has never been easier to buy Bitcoin and take safe self custody of it. There are plenty of resources explaining how to do it. Multiple inexpensive and robust wallet solutions are low. I see people saying things like, I thought Bitcoin was supposed to be for the people, for peer-to-peer cash. Now it's all big corporations. For the people, anyone with internet access can buy it, hold it, or send it. None of that is negated by large entities, which are also run by people buying it as well. So this para is pretty interesting. So the people who don't subscribe to the idea of Bitcoin treasury, they say like Bitcoin was supposed to be for the people, for peer-to-peer cash. Now it's all for big corporations, and it is for the people. Anyone with internet access can buy it, hold it, or send it. None of that is negated by large entities. So basically, even the large entities are also run by people, right? So what I can say is like the people who are running Bitcoin treasury companies, highly smart individuals. They know what kind of arbitrage they are doing currently. Like they are having this tax arbitrage, they are having currency arbitrage, they are exploiting large pools of capital. So basically, this again comes back to the point made by Preston in our session where he said like orange pilling is not scaling, and the way only where Bitcoin's price can go up is through large pools of capital coming into Bitcoin. Like, for example, your grandfather or grandmother might not be comfortable gaining exposure to Bitcoin, but they can they can buy STRK or STRF or STRC with the perpetual preferred stocks, and they can get more yield as compared to the traditional investments with lesser volatility. So this is how things will go forward into the future. That is why I'm in agreement with both the cyberpunks and the suit coiners. I want Bitcoin to be useful as freedom money, and that's in the large part why I am a general partner at EgoThat Capital, where we provide capital to startups, companies that build solutions for Bitcoin network and its users. That's also why I support Human Rights Foundation and other non-profits as they fund developers and education providers that focus on providing financial to people in authoritarian and or inflationary environments. And yet, it's also rational that large pools of capital, whether it be corporations or investment funds or even sovereign entities, are going to buy Bitcoin once they figure it out. It's large and liquid enough to be on their radar now. It's important that the majority of people are not active investors, they don't buy individual stocks, and they don't deeply analyze the difference between Bitcoin and other cryptocurrencies. If they do speculate on something as a trader, they are likely to buy at the top and get shaken out at the bottom. Invest passive ways rather than chosen by them for themselves. In older days, it was typically a pension. Today, it's often automatic 401k, employer matching with a mix of index funds or financial advisors picking investments for them. So, understand this thing 401k as NPS. So, basically, for the people who are working in India, there is kind of a thing like PPF or NPS. So this is automatically like your employer deducts your some part of your salary and put into that PPF or NPS. So what if a Bitcoin treasury company becomes so huge and now they have some products which can fit into this PPF or NPS kind of a thing. So basically, this thing happened in US. Like MSTR is now just one step to get into S&P 500. And when MSTR goes into S&P MSTR, and from MSTR they will hold Bitcoin exposure. So this is a good way. Like for example, if Jet Kings becomes so big in India, at one point in time they can offer some preferred products, wherein these preferred products are in some portfolios of these NPS fund managers, wherein every employee in India has their account in NPS and they will get exposure to Bitcoin. So this is the reason why Preston Peace and Lyn Alden are talking that Bitcoin treasuries are basically more related to Preston Peace. Like he made this point, Bitcoin treasury companies are BTC super spreader. So this is how Bitcoin as a network and as a asset will scale. So basically, this is how I am linking this article with the things which happened in the summer school. So this is kind of I am not just reading this article. I am also linking what happened and uh, what has not happened. In my view, it's unreasonable to expect billions of to Bitcoin as an active decision. It's, however, reasonable to work hard to make it so that anyone can access Bitcoin if they choose to, by making the barriers to entry as low and frictionless as possible via technological solutions and educational. Thanks to the hard work of many, frictions have been never been lower than they are right now. So this is how Lane is explaining. Like, uh, let me go back to the Bharat example. So let us make Bitcoin very easy and very what I can say, very easy and simple, so that uh, even a person sitting in Indian village can. And on the other side, this thing is hard, and the other side of a thing is like some smart guys in the Wall Street or in the Dalal Street, they start their Bitcoin treasury companies, and from that basically they enter into Nifty 50 or S&P, like what, uh, top 30 companies or Nifty 50, and from there maybe then people get access to Bitcoin. So this the the part wherein Bitcoin treasuries comes, this part is scalable, and not the first part wherein we literally go to villages and orange pill every other individual. Basically, if you go into a village, they will say, not you don't need to go into, even if you are in Mumbai or Bangalore, you will meet people wherein when you talk about Bitcoin, they will think that this is scam. So this is what this point is. The best phrasing I have seen for this is, Bitcoin is for anyone, not for everyone. Stress on this line. Bitcoin is for anyone and not for everyone. So this is Lyn's opinion, and I subscribe to this opinion, and I am fully convinced that this is the way for now. Like whatever understanding I have got, um, I subscribe to this idea, like Bitcoin is for anyone, not everyone. Stress on this line. Think about this line when you go back. Like when I was reading this article for the first time, I like literally I was like literally amazed, like how by using how has Lynn coined this phrase, like Bitcoin is for anyone and not for everyone. So not for everyone means for every people in Bharat. Like it's for anyone who is willing to, but I mean, it's not ideally for everyone, because there are still challenges, and it's our work as a cypherpunk to help and understand them. But it's orange pilling, and orange pilling is scalable. This is the problem. So this sentence, I like sentence very much, like Bitcoin is for anyone and not for. What this means in practice is that everyone should be led to water on the topic, but only a subset will choose to drink. So this is how it is. Like, uh, this is like you can't spoon feed. Like you can teach the people like how to grow crops or how to do fishing, but you can't literally spoon feed everyone to buy bitcoin, buy bitcoin, buy bitcoin. You can't do this. Like you can show why bitcoin is good and why it is good, and the next part of the study is to that individual. Like it's to that individual to study and figure out why bitcoin. So let me go to risks, or should I keep this for next session? It's 9 already. Maybe uh, it's too much. Maybe we can do a part 4, and the floor is open for everyone to discuss till now. And maybe if or till now the floor is open, and if there is no question, me and Shivam can uh, take you through what happened in the summer school. That's it. Jatin, you can stop recording.